Hey everyone, welcome back to my channel. If you're new here, my name is Carla, and I was wondering, do you know that most of the wealthiest people in the world have millions, if not billions, in dollars on debt? Well, yep, that's a thing. That is right. Debt, like you just heard. But here is the thing: they are not drowning in it. Instead, they are using it to make more money. That's how wealthy people think, and that's how they operate. So today I'm going to break down 5 powerful ways that rich people use debt to grow their wealth, and how you can do it too. How you can apply the same strategy to your life. Let's dive in. First off, before we get into the details, remember this: debt, when used strategically, can be a tool of building wealth. Let's start with the first method that I have for you today, one of the most common and is very, very valuable. So, the first one is real estate investing using traditional mortgages. Rich people don't buy real estate all cash. Most of the time, they leverage traditional mortgages. So this is the smart way to do it. Here is how it works. They borrow money to buy real estate, and while they make monthly payments, their tenants or properties generate rental income, which cover usually the mortgage and leave them with some cash flow. So let's put an example here. Let's say that you purchase a property using a mortgage with just 5% down. Over time, that property appreciates in value and you build equity as the mortgage is paid down. Wealthy people do this on repeat, sometimes using government backed loans like FHA loans, which require little down payments. Eventually, they turn the primary residence into a rental property that pays for themselves. So why this program is special? So basically, is a minimal upfront cost, because you are just paying a little as 3 to 5% down. So which is a great opportunity there. The other thing that make it special is the property appreciates while others pay down in your mortgage. So this is a good deal here. Now I'm going to share with you some pros and cons. The pro is that build equity over time. The tax advantage and appreciation is great. And also, as a pro, you have the potential for passive income. On the con side, you have initial debt load, and also you have market fluctuations, so property values may rise or fall. So you have to be aware of that. The best tip to succeed on this particular way basically is start with a small property using low down payment options like FHA loans, then convert it to a rental property to begin building long term wealth. Next, we have a method that is turned countless people into millionaire, which is the BRRRR method, that stands for buy, rehab, rent, refinance, and repeat. So with this, what rich investors use this method by buying distressed properties with others people's money. Basically, literally, that's what they do. Usually through hard money lenders or loans or business credit, and then they renovate that property to increase the value and rent it out to generate income. Later on, they're gonna refinance to pull out equity and then repeat the process with a new property. So this is a great point of view. This is a great way that a lot of rich people use to build wealth. And I'm going to put an example. So let's say that you buy a rundown house for $100,000 and spend $50,000 renovating it. And now it's worth $200,000. So you refinance that property, take out a portion of that, the new equity, and reinvest it into another property without using your own cash. You see what I did there? So that example is a great example on how you can take advantage of this. Why this program is special? It's allow you to recycle your investment capital repeatedly. Another reason this program is special is because of the potential for infinite returns as you continue refinancing and reinvesting. It's like a cycle. It's like it's like coming. It's like a circle is on repeat. So some of the pros and cons is the pros is no need continually find new capital, and another pro is build a large portfolio of rental property over time. On the con side, it requires good project management and patience during renovations because it can be tedious, it can be really tough, but I mean, it's worth it. Another cons is risk of over leveraging if the market takes a downturn. So the best tip to succeed on this particular program or method is start small with the BRRRR strategy to gain experience, then scale up. Learn to assess renovations costs accurately to project your profit margin. That way you are aware and you can play this in a better long run. Number three is all about tapping into the equity you have built. So these methods always allow wealthy individuals to pull equity out of property they already own and use that money to invest in new assets. So it's like having credit cards attached to your home, but instead of using in to frivolous purchase, they use it to buy more income producing assets. So let's put an example over here. One of them is, imagine you own a home worth $500,000, but it still owe $200,000 on your mortgage. So you could take out a HELOC of $200,000 depending on your lender and use that to invest it into a real estate businesses or in the stock market, whatever you want to do. So the point here is that you can reinvest that money to make some revenue or to make more money. So why is this program special? Well, there is no need to sell home to asset its value. And also you only can pay interest on the amount that you use. So making it flexible financing option. So let's say that from those $200,000 that you just got proof from your HELOC, you just use 50,000 for whatever reason. So you just have to pay interest rate on those 50,000, and you still have available for another occasion to use the remaining balance, which is $150,000. So there you have it. That's a good thing too, that you can learn how to use this on your favor. Some of the pros of these is like unlocks liquidity from your home's equity. Also, you can invest in multiple opportunities while keeping your home. And on the con side, your home is at risk if you can repay the HELOC back. So just keep this in mind. I mean, don't wear a hat bigger than you can wear it. Let's say that. I mean, I don't know. Another con is variable interest rate may lead to higher payments. So just keep this in mind. The best tip to succeed in with this particular method is only use HELOC for investment purposes that generate a return, like I just mentioned, so that can make you money back in like buying another property, or let's say avoid using it these for depreciating asset that won't give you money or is gonna be a loss. So don't do that, because at the end of the day it doesn't worth it. The next method actually is a technique that billionaires and private equity firms love, which is leverage buyouts, also known as LBOs. So LBO allow you to acquire a business using debt. Here, what you do is you borrow money to buy a company and use that company's asset and cash flow to pay off the loan. Wealthy individuals and firms use this to acquire companies without using much of their own money. Example here to see if you can maybe understand better is, let's say that you want to buy in a small business worth $1 million. You only put down $100,000 and you borrow the remaining $900,000. As the business generates revenue, you pay back the loan with the business cash flow, eventually owning the company with little of your own money. I mean, if you compare this, the only thing that you put down was 100,000 instead of the whole million. So there you have it. Why is this method or technique special? You can control large businesses with a small initial investment, and also is a potential for huge return with minimal personal capital. So some of the pros are acquire businesses with little upfront cash and also use the company's revenue to pay off the debts. On the con side, you have if the business underperforms, you could face financial losses. And another cons is that require a deep understanding of business operation. And if you don't know some stuff, you might get on the bad side. So the best tip to succeed in here is only acquire business with a strong, consistent cash flow and asset that can secure the loan. That way you don't get in trouble and you put in risk your own money. And last but definitely not least is we have business credit. So this is where wealthy individuals borrow money through their businesses. So rather than the personal loans or credit cards, they use the business credit. They leverage the business credit. So with business credit, you can borrow tens or even thousands of dollars without affecting your personal credit score at all, or anything personal report, profile, or anything like that. So wealthy people use these to buy income producing assets like real estate, a stock portfolio, or expand their businesses. And this is great to deal with or to consider. So just keep this in mind too, because this is how wealthy people get wealthier. So I want to put an example here is, let's say that you open a small business and qualify for $50,000 business credit. Instead of using it for the day-to-day expenses, you put that money into buying a rental property, which generate cash flow, right? So use this profit from the property to pay off the credit while still holding the property as an appreciating asset. So why this method is special is because allows you to separate your personal and business liability. And the other thing is builds business credit history, opening up more funding opportunities. This also has pros and cons. The pros are doesn't affect your personal credit, like I just mentioned. Also, higher loans limit for businesses, and you can use it to buy income generated asset, like I just put in the example. On the con side, if your business fails, you could be personally liable. And also, another cons is require careful financial management. So the best tips that I can give you to succeed on using this method is use business credit to acquire assets that generate more income than the loan's interest payments. So pay off the loans with the income you generate and go from there. So there you have it. 5 powerful ways rich people use debts to get richer. Remember, debt isn't a bad thing when you use it strategically to buy income generated assets. So you think it like that, and if you use it like that, it will be profitable and it will be a good thing, definitely 100%. So if you want to learn even more about leveraging debts like the wealthy people do, make sure to subscribe to my channel, like this video, share the video with people that might need this information, and comment below if you have tried any of this method and what has been your result. Thank you for watching, and I will see you in the next one. Bye.